201. There we are on the Dow after news of robust manufacturing data, a strong start for the month of June. So how should you be positioning yourself in this? We have a bull and a bear on hand to discuss. For the bulls, Paul Schatz, president of Heritage Capital, and for the bears, Dan Fitzpatrick, president of stockmarketmentor.com. Great to see both of you. Paul, I'll kick it off with you. I mean, certainly we saw quite a rally in the last couple of months. Does this mean, could it suggest, judging by today, that we'll see a continuation of the rally in the month of June?
Well, you're right. We have seen a huge rally since the bottom in early March, but let's not get carried away. We're already up 35%, so to say that, is this real or not, the rally's been real, and the key is it's liquidity driven.
Well, I'm not asking if it's real. I'm asking if it's going to continue. It's
going to continue. I mean, our initial targets were 9,000 2.5 months ago, possibly 10,000. Nothing's changed. The market has done nothing wrong. Keep that in mind. Nothing.
Well, I mean, are you going to continue, Paul? I'll continue with you for this one, but are you going to continue to see the kind of upside we've already seen, or is that already come and gone? I mean, what's your chance of really being able to make money at this point?
Well, as I said earlier, I still think we're going to at least down 9,000, maybe 9,500, 10,000 by Labor Day.
Okay.
But we're not going to be at this vertical pace forever because, as you know, the more vertical it gets, the more parabolic, then you've got much bigger issues. But yeah, markets has done nothing wrong yet. So until it does, you on the bull side.
All right, Jim Fitzpatrick, I know you're on the bear side, but look at the backdrop today. Construction up 3 straight months. Nobody thought construction would be up for April. Nobody, and it came in. In the ISM number, okay, we're up 5 straight months, but the big number now, over 50% and 52%, are the orders. The order flows are a classic leading indicator, and I say you have to stay with the reflation trade right now. You got to stay with industrials, with raw materials, with energy, and speaking of reflation, with banks also. To get out of the market now, I don't care about General Motors. I don't care about the UAW. What I care about is the underlying recovery is alive and well.
Okay, thanks for having me.
Yeah. So go ahead. Give me a bear response. I'm ready to come at you. I've been waiting for you.
Give it a go.
You know what? I got to be intellectually honest with you. Short term, I'm a bear. I'll actually take the other side of this argument. I think we're going a lot higher because there have been a lot of guys that haven't believed it, that have been selling at the 200-day moving average, and I've been one of them. Over the last week, though, or so, I've been actually ratcheting back in. Longer term, though, I'm happy to give you the bearish case because we're setting the stage for inflation. We're seeing a little bit of that now. But what
You're concerned about the dollar as well, aren't you, Dan?
But see, I don't know. Long term, I'm not making a long-term
case. Well, what is long? Hang on one second, because I'm curious. What do you mean by long-term and what's short-term? Is short-term through Labor Day?
Yeah, right.
And long-term's through the end of the year, or through next year?
Long-term is next year. Listen, here's the thing. We don't have the bullets to kill inflation once it starts, because what's the underpinning of our economy that everybody and his brother's been talking about? The housing market. How is the Fed going to fight inflation once it really starts if we've got to keep rates low in order to make housing affordable?
Paul, can I make this point? There's a difference between ending deflation, Paul, and reigniting inflation. And a lot of people mistake this. They say economic growth causes inflation. I don't.
No.
Now, in the long run, excess money, too much spending and borrowing, too much Fed. Yes.
You know what? Printing the dollar didn't help Zimbabwe too much.
All right, Jim, hang on. I want to go to Paul. I understand in the long run there may be inflation, but I don't believe there's a big inflation breakout, Paul, right now. And that's why I'm so darn bullish on the stock market. Where are you coming out? What are you buying here?
Larry, I agree with you, as I have for the last couple of months. You go from deflation to reflation and then to inflation.
Right.
We're not there yet.
What are you guys buying?
We're not there yet.
I got basic materials, metals, infrastructure.
So you agree.
So the inflation plays.
Like I said, I got to be intellectually honest. Short term, you got to trade the psychology of the market. We're in a positive feedback loop, and there's a lot of latecomers that are well enough capitalized to where they're going to push the market
higher. But long term, are you buying then commodities? Is that what you're trying to invest in?
Absolutely. I'm buying commodities, selling bonds, selling the dollar.
Get out of Treasury bonds. Get out of Treasury bonds. The 10-year bonds going to 5%. What about corporate bonds, Paul? You know, corporate bond rates have been falling. The spreads have been narrowing, Paul. That's another bullish sign for the economy and the stock market.
The high-yield market, similar to 03, has had a pretty historic move since the lows.
Right.
Is that going to continue at this pace? No, but high-yield yield still offers attractive opportunities, more so than the corporates. And get back, yeah, I agree. Long energy for sure, long commodities, but I'm not bullish metals. I think gold's overdone. I think silver's overdone. That's the area where I'd be on the short side.
Okay, and we just saw some of your picks right up there on the screen. We thank you both for joining us today. Good stuff.
Thanks.
203 right now on the Dow. Melissa.
I like Jim. He's letting you have it there a little bit.
But he's saying, yeah, it's going to be bad, but I'm buying.
Oh,
I love
Dan,
that. It's
Dan,
going to
I
be
got it
bad,
wrong.
but
I
I'm buying.
apologize.
All right.
Yeah.
He's
All
trying to be intellectually honest. I appreciate that. I think the recovery story, today's stats, and the 200-point up is a bigger story than GM in the short run.
Yes, you're right about that. You're right about that.
I believe that.
Up next, AstraZeneca and Merck are joining forces.